All right, guys, welcome in there. All right, so um, I came across a book through the trading space since I started in 2018. Um, everybody talks about mindset. Okay, there's different ways for us to improve our mindset, right? Books, audios, everything. And the problem, and just in my opinion, this is just the way I operate, right? The problem is just that there's just sometimes too much information out there that we feel like we need to listen to everything. And that can be thinking with trading as well, right? It's so much out there. I feel like we need to learn everything. But over the time, right, I realized that I only listen to two videos for motivation in the mornings. This one, which is the most recent one that I added to my library. In the past, it was just one. So for the last like almost 2 years now, I was listening to this audio from a podcast, and it repeats the same thing over and over. Basically just repeats affirmations over and over and over and over and over again, the same affirmations. I think I shared it one time. And then when I came across this video, I go, oh man, this is a really good one. Daily excellence, marking, mastering the art of it, forming good habits. And just the more you listen to the same thing over and over again, it's like you're also peeling, a new layer of yourself out away, and then learning something new from that same video. Correct me if I'm wrong. What's his name? Bob Proctor. He was a master student and reader of the book Think and Grow Rich. He read that book, I'm pretty sure, millions of times. And sometimes it feels like we jump too fast to other things. But yeah, these are the videos that I like to watch at least every night, right? And then in the morning, and just to kind of get me primed up. Yeah, so sharing that with you guys. Yeah, but Jim Rome, I think Jim Rome, and also too, we got to connect with that motivational speaker, right? I think we all come from different eras here and there, and we don't connect with everybody. And that's why there's different ones out there, right? There's different ones out there. Like for example, yeah, I'm not gonna mention any names, but I just connect more with Mr. the late Jim Rohn, and yeah, just really really calming the way he talks. That's what I connect to a lot. All right, but let's get started. Hopefully, you guys find your inner motivation way to match yourself. But let's go ahead and get started here. I already hit the record button. As always, welcome into our Sunday, June 8th, Sunday studies. This is still officially Yes or Yes Academy. However, though, right, this is our inner circle group. So as I told you guys, because of the support that you guys came from the past, we have this private chat for us, where you get some perks here and there, some sessions that are just for this group, just so we kind of keep it nice and homey. But other than that, right, this is an educational platform, so any information shared is for educational purposes only. Trade ideas, suggestions, speculations, it is trade at your own risk. So please make sure you know how to take care of that stuff and get us started. But other than that, y'all, let's go ahead and get away. Let's go ahead. Let's look at all these C's here on the Sundays, right? This is our inner circle. Those C's, this is our private group, which I'll try to. I know whenever Marcus Duff comes in, I want to make sure we share that strategy into the Yes or Yes Academy, simply because people need to know ETM, and I think it's a good opportunity for us to share there once a month, right? Once a month when he gets here. All right, guys. So yeah, I believe it or not, I did not take this trade. I shared this with you guys on the chat that we're going to talk about this GPJPY trade, and I didn't take it, but I have it marked up. Okay, but it's all going to come back down to, like, you know the box system. It's extremely helpful to me. Uh, it's helpful because I think I told you guys before, or I may have shared it with Dan. When you're teaching, you're conducting a class, your brain is not really in trade mode, right? It's like it's teaching and 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 um and as you're teaching, you provide more insight here and there, and next thing you know, you start forming other analysis in your head or what you're teaching, and next thing you know, you're looking for a sell the entire time, and you know, like, oh man, I was looking for the buy the whole time. I mean, I was looking for the sell, but the buy came up for whatever reason, and then it just, I took a lot of bad trades, with that. Well, not bad trades. I got caught in the moment of teaching, and the teaching aspect kind of just changed my bias. When not a lot of times it's not like that, right? I do flow with the market. I do like to flow with it. Tommy, if you have it available, can you put in the chat? I didn't write it down, but I know I had it in our chat. What did I say about markups? Maybe you can just share with me again in the chat, and I want to repeat it again. Okay, about the what I personally look for, right? Like, I don't look for the perfect setup, right? I'm not trying to find the perfect setup. I'm trying to find the movement, the main movement of what I want to trade that day, because the setup can fail. Okay, the setup can fail, and that's something that I really want to mention as well, is that it's all about one second. Excuse me, getting my pen there. But let's start it in pieces here. Um, for starters, okay, for starters, everything does come down to that 1, 2, 3 strategy, guys. It does come down to that 1, 2, 3 strategy.
Yes, G, I got it. I got it right here.
What did I say, man?
Uh, it says, hold on. You want to trade, it says you want to trade setups, not chase movements, but you also want to be aware of potential movements so you don't fade strength blindly. So you see a high probability move forming, then you wait for the setup to align with your system, and then you execute it with
What was the
clarity.
thing? It was high probability, right? Probability.
So you see a high probability move forming, and then you see if your setup aligns with that movement.
Correct.
Yeah.
Okay, perfect. So that was the thing that that we talked about. Higher probability movement versus higher probability setups. Okay. You'll hear a lot in the re in the guru trading space about you got to wait for quality setups, high probability setups, and so forth, right? Uh, I That's really important. I do look for high probability setups myself, but first I want to um, speculate on the high probability movement. Where is price going to go that day that I'm looking at the charts for my trading plan? How do you know which is, what's the movement? Well, you look at the sessions indicator and they'll tell you, how price likes to move. So obviously you guys know that I like to trade the New York session, right? I trade the New York session. In that first 2, 3 hours from 7 to 10, look for entries. So I'm looking for what's the high probability movement during that window of time. Okay. And then from there, I look for the setup, right? Because if somebody's only making a decision based on the setup, they can get stopped out. And then what happens afterwards? The movement does happen, right? So that's my priority. Look for that high probability movement, right? High probability movement. So that's just something that I wanted to share on that to start off, because that is literally how I trade, and that's literally how the box system works as well. Okay, but back to the 1, 2, 3 strategy, and the 1, 2, 3 strategy is very simple, y'all, and it's a it number it's 3 rules. Find your high and low, or find your range. Okay. If you're looking for buys, I thought I updated that. I guess I didn't. Yeah, find your high and low. What's your range? Okay, so if you see an impulse up, what are you looking for? Buys. If you see a structured move up, what are you looking for? Buys. If you see a candlestick that is bullish in your favor, okay, what are you looking for? Buys. Okay, so find your range, let it make a high, let it make a low, and then from there, you simply measure that movement, low to high, measure the other movement, low to high, and then measure your candlestick, low to high. It's really, really that simple, y'all. Really that simple. Okay? Really that simple. Another thing that Tommy asked me a while back, uh, I'm gonna pick on you here a little bit, Tommy, if it's okay. And if you can speak, it's fine.
Yeah, as long as you don't talk about the wicks.
I got you. Um, remember Tommy was asking me like, how far do I need to back test to I forgot exactly how you asked me. But what was my answer for you, Tommy? Do you remember?
Yeah, you said it's not about how far you backtest, it's about you said backtesting the right the right situations.
Mhm.
Yeah, that
Back test
just
exactly what you're going to look for.
yeah.
Why back test years and years and years of data when we only care about back test what we're looking for? Like, okay, well, so this is literally if I'm looking for buys, well, I use a fib and then look for my entry at the. So technically, guys, all my entries are the same, right? I find an impulse, I measure, or I measure an impulse, I measure that direction, and then from there, I try to figure out where price is going to walk to. We've seen this over and over and over again. Just like the book of, the quote that we always say by Atomic Habits, chapter 20. When you know the simple movements so well that you can perform them without thinking, right? You are free to pay attention to more advanced details. Okay. So I only want to know, okay, how do you make money in this market? And how do you make money in the market is very easy. If price made an impulse upwards and well, you look for buys. Okay. And the only thing we can control in trading is our stop loss. So there it is. Okay. So for example, here, right, and this thing that I measured, here goes the low, here goes the high. I measured it. Price is going to come back to at least the 23% first. And then from there, I decide if I want to buy from there or if I'm going to go a little bit lower. But based on the rule, we already fibbed it, right? We fibbed your high and your low. Excuse me, we found our high and low, then we fibbed it. Now the fib levels communicate to us. You can write your rules, whatever you think is best for you. Okay. Just a little bit smaller. Maybe that's too small. Okay. So this rule right here, after after you find your high, after you find your low, and you measure, I mean, you back test, right? Are you getting around? This one and the entry depends is back on you. Do you want to enter at 50%? Do you want to enter at 61%? Do you want to enter at 78%? Okay, in this scenario, we have the long position entry level between 50, 61%. Okay, we put the stop loss there at 76. Oops. And you put your take profit at 0. Everybody got that so far? But gee, there's a low here. There's a lower low. Okay, it's yeah. Those things are important. They're definitely important. G is not a 2-to-1. Okay, high probability movement. if you want the setup, all right, there you have it. There you have it. But what's going to happen with this? What could happen with this too? Well, price come here to 61% and then take off. Right? So, um, is that making sense, guys? Is
Yes,
that
sir.
is that making sense?
Got a
Good
quick
stuff.
question for you.
Yes.
I've
Who
se-
we got here?
I've seen examples where, in this example here, this buy example, you have three setups, one at the 236, 382, and the 50. For those trades that people are taking, all three trades, or just what are your feeling on that?
Got it. And that's 1 second. I'm gonna put the volume just a little bit because my if I heard you perfectly, I just didn't hear you loud enough. All right, there it is. Um, I know Dan, like for example, Dan, correct me if I'm wrong. Sometimes Dan just layers his entries at 2, 3%, 38, and then 50,
Yep,
right?
that's how I layer. Yeah.
And that example right there, Mr. Ron, is just he's looking at a high probability movement, right? High probability movement. Now there is another way to there's another like obviously another layer of information here regarding okay how many pips you're going to go into drawdown if it's if it's a what lot size to use. That's definitely another layer to success, because obviously if you over leverage, let's say you do decide to enter 3 times, let's say one in between the let me erase this. Okay, let's say we do decide to enter uh, one entry here in between the 2,338%. Let's say we enter the other entry right here in between the 50, 68%, and then our final entry right here at 38%. Okay. Now, all we have to worry about is, okay, how many pips or drawdown, depending on the lot size you use, will be here if price does go down, does go all the way down. Do you have enough leverage or margin to withstand that drawdown, right? If price goes down to the third entry. Okay. And then another layer of thing is like, okay, well, is that 1%? Is that 2%? I was told to only make 1% of my account, or only risk 1% of my account. Guys, this is the reason why we have these Sunday study circles. This is the reason why Marcus and I have that ETM strategy. Okay. And there's a lot of things that we learned in the beginning that I learned myself. Always look for a 1, 2, 3. And I'll make sure you risk 1% of your account. And learn the movements, learn how to win, multiply your money. Okay. That's have a plan. Have a plan that you ever had to winning position. I do. I it just depends on the movement, Joe. If there's still movements to follow, okay. Um, it's I do. Okay. Um, and from here, right, that's why it's really important to understand the fib, right? With fib, how price likes to walk through this fib. And let me give you an example here. Let's say we enter here at that 50, 61%. That's our entry area. Okay. Our stop loss is down here somewhere at the low. And if price does come here, turn around and pushes up, where's the movement going to go? But here's the thing, Fernandi. A lot of people are still teaching that old stuff, man. That old stuff. And they're just repeating themselves over and over and over and over again, man. That's just they're still teaching it. Like I remember, I am not I am not putting a stop loss more than 5, maybe 10 pips. In this market that gold is moving almost 300 pips a day, heck no, right? Okay, so price does this, and then it needs to complete a pattern, right? It needs to complete a pattern, but we don't know when it's going to complete a pattern. We don't care if it completes a pattern today or not. We don't care if it's Monday. We don't care if it's Friday, right? An hour. There you go, Fernandi. Okay, price needs to complete a pattern. So the high probability movement, okay, is that it will get back over here. Everybody following? But what if it comes down to 78% and takes this low out and then it goes back up? That's a high probability observation. That's good to add definition and detail, but if you put your entry at 50, 61%, and then you put your stop loss at this low, and you get stopped out, you were always right. But because you didn't map out a high probability movement, the moment you lose, day is ruined. Okay. So the banks, they're looking for high probability setups. The banks create high probability movements. Just put it like that. Okay, guys. So now let's go back to the box system. Everybody ready? The box system is a prime example on how to use the 1, 2, 3 strategy. And that's 20. That was 27 drawings. Oh wow. Yes. All right. So the box system. Let me turn on the box. And let me turn off the candlesticks. And I can't turn them off. One second. All right, good. Now we do need the candles. Actually, we don't need the candles first. Let's start with that raw example. All right, here goes the box system, guys, okay? Here goes the box system right here. If you guys haven't gotten the new indicator, please get it ASAP. The new one has the green line and the blue line. And it'll sure have this the tag right here. If you haven't gotten it, I'll share it right now with you guys, the link. Okay. The other one will go away soon. This one, right? Try not to share it. It will be available to the public pretty soon. But don't share it because this could be something that you can use to sign up somebody for free, invite them for free. And at the Yes or Yes Academy, remember the Yes or Yes Academy has a free service. Has a free service that allows people to sign up, allows people to have the basics course, and also have 1 day of like some mindset calls, which are currently not available in English, only in Spanish. So they have access to that, right? They're good and so forth. So I want to kind of provide a little bit more value on the free side of things. Okay. And again, though, right? How it's worked for me, guys, is like the more I open my frequency with good intentions and giving, I just receive, right? And that's just how it's worked for me, right? This information that I know, I don't want to keep to myself because if I keep it to myself, it's only going to help me. And what fun is into that? So just a little side note on that. But anyways, right here, right, the box system right here. Okay, you guys know, right, that there's 3 boxes. Yes, Mr. Fraser. Yep. The moment you sign up, you immediately you have an affiliate link. Absolutely. Remember, yeah, you sure do. Alrighty. So the first box is the 17. Okay. The next one is the 52. And then the last one is the 204. Okay. All that means that there's 17 candlesticks inside of this box. There's 52 in the middle one, and there's 204 in the next one. Okay. There's also a average price line, right? The average price line, which is the midpoint. So each one has the midpoint, the green midpoint, the blue midpoint, and then the black midpoint. Okay. So if we apply this back to the 1, 2, 3 strategy, okay, you simply, I mean, we don't have the candlesticks here, but this is more of a bullish scenario, right? This is the bullish scenario because of the position that um the thing is there, right? This is bullish.
The midpoint.
Yep, the midpoint's right there. Okay, it's a bullish scenario. Everything is bullish and so forth. Alrighty. Okay, so if we want a bearish scenario, let me just flip the scales. And that's a bearish scenario right there. Bearish scenario, everything's down and so forth, right? But let me flip the scales back. All right. So if we just simply apply the 1, 2, 3 strategy to this, right? It was started from small, medium, large, just so you guys can see it. Okay. If you want to just trade the blue box, well, you measure the blue box low to high. Okay. You wait for a pullback. Obviously, 50% is the midpoint. You can enter around here, stop loss at the low of the small box, and then you take it to the extensions. Pretty simple, right? Let's say we always enter at the midpoint. Right there. Pretty straightforward, right? Simple, in my opinion. Like, all right, you know what? For gold, it's too volatile. I don't like the 17. I'm gonna use the 52. All right, well, same thing, right? You measure the 52 box. You find the 50%. You enter at the 50% at least. You put your stop loss at the low of that midpoint. Okay, once you start getting more experience, you start realizing, okay, sometimes the low, I like to enter at the midpoint of the 52, but the low of the 17 holds on, right? But let's keep it like that. And then we take profit at the extension. Okay. Like, oh, you know what? I definitely do like, I like to enter the big box because it just works better for me. I trade with bigger lot sizes, and I noticed that one holds the most. The same thing, you measure the entire box, you enter at the 50%, stop loss at the 1, and then you take it back to the extension. All right, guys. You see how that worked?
So you're
We got,
trading the bigger box. You're fibbing the bigger box. That's what you trade off of.
for the most part, yeah, Mr. Ron, I'm always trading the big box, but the examples that I just showed that you can do them in all three examples. Yep.
I got it.
Yeah.
I got it.
Yes, sir. All righty, guys. So now here's the thing: what time frame to do? So my experience now that we're using more of the boxes, it is best to kind of keep just two time frames working with each other. Okay, two time frames. When there's high volume New York session, okay. When there's high volume New York session, okay. I like to use the 5 minute and then the hour. Okay, the 5 minute and then the hour. I'm noticing that when there's low volume sessions, we can potentially use a 2 minute and a 15-minute chart. But that's still kind of being back tested a bit there. But let me add the candlesticks right back. All right, just so you can know how to mark this up here. All right. At a glance, well, we kind of went over it. Do you guys see the bullish structure? This is bullish, correct? At a glance.
Sure.
Perfect. Well, that's a nice little update on this Zoom meeting. Okay, I got you. So let's play this out. Let me say, okay, I did find the lowest point down here. Okay. Remember, how is this range created? Well, there's 204 candlesticks inside. It's always reading, it's only fitting 204 candlesticks, 204 candlesticks. Okay. And if you find it's low and the high, and that's the reason why it creates the range. So the low and the high of those 204 candlesticks or 52 candlesticks or 17, they make there. Okay, so it's bullish. All right, let's try this again. All right, you know what? I'm gonna enter at the 50%. There's three traders, right? I'm at your 50% of the medium box, and then I'm gonna give myself. If I get a 1-to-1, I'm perfectly fine. There it is. 50% on the 52. Stop loss at the low over here. I'm just looking for a 1-to-1 scenario. There it is. And then last but not least, right? Entry only at the big box, stop loss down here, and push up right here. This and Nico, it's all coming from the cloud. All coming from the cloud. The box system. And more specifically, I think I made it last class, one before Marcus's. I made the connection on why that 204 is really important, especially, well, actually, no. The most important number out of this system, guys, is actually 17. To be more specific, is actually 17.5. That's where this whole strategy was born. Okay. There are videos on the Sundays, the studies that happens. All right, all 1-to-1 setups. Okay, all 1-to-1 setups. Okay, let's see which one works, which one doesn't. Actually, hold on. Price, yeah, that's fine. And again, these lines can be moving as they flow. All right, but price already made the higher high. So unfortunately, none of them three worked. None of them three worked. Yeah, the moment price made that higher high, right there, the scales change. Okay, the scales change a bit. But yeah,
a quick question for that. That actually, if you put the entry in right at this point, trades after. So the first one and the second one they kicked in. Did they play out though? So in other words, when they entered,
What point then? I don't see what point.
so when you did a replay, so we had you're set up right here. So when you played it, it kicked in here at the 50. Is that correct? Something's
Well, yeah, it clicked on the 50, but it clicked on the 50 after the box has shifted. You see what I'm saying? It's like these entries are set in stone based on what I analyze right now.
but they're
That's
still pending orders. So so what I saw is basically it shot up a little bit higher, came back and picked up both of these, and then was heading back up. So these are still good entries, if I'm not mistaken.
oh, like if they didn't pick them up,
Correct.
right? Yes and no, Dan. Yes, because
Okay.
if we leave the setups the way they are,
Mm-hmm.
we're going back again to that what did I say? High probability setup,
Mm-hmm.
right? Versus high probability movement type of thing. And also at the same time, um, we may be at a higher high during New York session
Mm-hmm.
where I favor more a sell because I see the pullback coming. You see what I'm saying?
Okay.
But yeah, these still could be very valid as well. Very valid because, but again though, um, I'm replaying this. This is actually going to go back to the topic that we said, right? These are the setups right here. These are high probability setups. Okay,
Right.
but the market moves and the market adjusts. So notice how we're getting more candlesticks, how the midpoint's adjusting. And this probably goes back to your point right there also too, Sonandi, right? Like we have to adjust with the market, guys. The market is flowing, the market is growing. We have new people coming into this market every single day. So we got to adjust to it. So the original setup that we had has changed as more time flew forward. Okay. And now this has to be adjusted maybe. That's to something that favors me. And even so, right? It went up. And all right, let me just this one now. Let me do this one as a 1-to-1. I don't, when price gets below the midpoint, make a note here, guys. When price gets below the midpoint, that entry is no bueno anymore. Okay. If it didn't come already to it first, right? If it didn't come to it already first, just go with the 52. All right, let's see what happens. And again, though the midpoint adjusted itself a little bit. Okay. And it still didn't touch that entry. And it made the higher high. Okay. That's why me personally, right? I like to just measure the entire box.
Right.
Thanks,
That's
Joe.
why the 1, 2, 3 is I think is easy. No, I think it's a simpler way of doing it, and that's basically where you're heading back to, right?
Correct.
Okay.
That's why we always got to get the bigger movement measured, like so. It gives us more room to find movement. Okay, now we can still enter off of the 50% of these 17 and 52, right? But we know that price with this thing can potentially get up here, correct? Get up there. Man, wait, we're an hour in or 30 minutes in? We're about an hour in, right? It's gone by fast, guys.
Having fun.
Yeah, man. TP zone, okay? And this is where the fib behaves really, really important, guys. That 23%, right? That's our money line. That's our momentum line, I guess you could say as well. Like our support and resistance area. Let's say we want to enter up to 38%. Okay. Let me see here. There you go. And price has trouble reaching it. Well, it doesn't want to, you see? You see how prices try to pull back? It doesn't allow it. What just happened, guys? What just happened right here with this last candlestick?
Is that accumulation?
Just
Momentum
the
shift,
candlestick by itself.
big shift in momentum, impulse.
Okay.
Impulse. Yeah.
Correct. There you go. So we were waiting for an entry at 38%. The price never got there. And then we got the impulse. Okay. So in these scenarios, Dr. Trees, what does how do you use the W setup? That's like kind of confirms like support and resistance to you. If you don't mind me type, you can type it in or however you wish. But yeah, once we have that impulse up, okay, once we have this candlestick close, a lot of things happen. Okay, gotcha. A lot of things happen, guys. Okay, look what just happened. First of all, the closure of candle. Let me move the fib to the right, just so it won't be too much in the way. Right there. Same thing, guys. Okay, just same measurement. The first thing that happened was, we got a bullish close right there. You got a bullish close above the momentum of all three lines. And we got a bullish close above 23%. Like, okay, so buyers are definitely more in control. It's not going to come back to 38% anymore. Or at least I'm speculating it won't. So now I'm just simply going to use this candlestick's momentum. Let me hide the indicators. And now what's catching my attention is this candlestick alone. And that candlestick alone is what? A low to high impulse. I found my low. I found my high. I fib that low to high. 1, 2, 3 strategy. Exactly right. Exactly right, Dr. Dries. We fib it. And because it's just one candlestick, our stop loss is tighter. We can use the targets of the fib from the big 204 box. And even just back to the highs, we're at a 1 to 2. Okay, let's see what happens. And there it goes. So how that worked, guys, we did the same thing over and over and over again. But in order for us to catch these moves, we have to have that high probability movement in our first. Okay. All right. Let's go back to this example here. I do want to close with some examples of gold. I'm going to move pretty quickly here. And then if you need to go back to the recording, please do so. Did I erase that chart? Please tell me I didn't. Oh, no, I didn't. Yeah, you can use a buy limit on that one, Pablo, because obviously it's a one candlestick. A lot of times, I'm just watching the chart, so I merely execute. But it's because it is a 5-minute candlestick, I'll be watching that particular pair and execute. Yeah, but I do me personally, I do everything market execution. All righty. So I told you guys I did not get the setup right here. Okay. I missed this buy to Dubai. However, let's rewind back. And this is how you backtest, guys. Okay. How did I miss that buy right there? Actually, I did buy it, but I just didn't want to hold it anymore. Okay. First of all, on the 1 hour time frame. Okay, this is the 1 hour time frame. We were bullish. You guys see that? We were bullish on this 1 hour time frame. The lowest low was here. This is the highest low, and the highest high. So we were bullish because that was the impulse. Okay. At some point, though, however, when we got new candlesticks, no, it stayed the same. But this is what I was going to show you guys right here. I marked up the chart. I did the Fibonacci and everything. I found the low, I found the high, etc. But when price got to my area of entry, notice here, based on what you guys learned just now, when it comes to the box, was this set up in a bullish scenario to buy it? Based on the momentum. It wasn't, right? Everything is pointing down. Here goes the high. Here goes the low. All the midpoints are there. It's definitely not ready. Okay. So that's why I got to say, you guys, we need to choose, okay, one indicator at a specific time frame is not going to work for all of them. Okay. Because they all have different volumes, different movement, different pip ranges, and so forth. Now, everything that I did about the box indicator, it all starts with gold. Okay. It all starts with gold. But other pairs, they require different attention. Gold likes to move. So then they said earlier, they can move 300 pips in an hour. GJ doesn't behave that way. So believe it or not, GJ needs more time. So check this out here. If I change the visit, I already have it on. I normally use it on the 5-minute and the 1 hour chart, right, with gold. But if I adjust it to the 15-minute chart, does our bias change now for this setup? The change. Would we have more confirmation to buy this now? Based on the box system. Here goes the low. Here goes the high. What's the impulse? Bullish. Believe it or not, Nico's asking, what are the indicators we used for the confluence? Do you still use the Oracle? Believe it or not, the midpoint of the 204 box is the Oracle. So you can check that one off of trying to get it. But yeah. Yeah, it's the Oracle. But again, right? We have an impulse. The price, though, like Dr. Ortiz said, right, is definitely below all 3 midpoints. But in this scenario, let me hide this fib. This is where the 1, 2, 3 strategy kind of just can calm things down. If you fib low to high, check what level we're in at Dr. Latrice. At that institutional level. that's probably one of the only times that I would agree with the high probability setup, simply because, and then, yeah, and it's a 45-minute rally based rally. Yes, thank you for that. Yeah, absolutely. So yeah, that was already checked off, which I didn't say at the beginning. Thanks for that. Right there. So these are Pablo's retracements. This is the one Pablo waits all the time for. Or he has more confidence on those. And why is that? Because it's so close to the low. And being closer to your low is a smaller stop loss in pips, correct? So I'm taking note, okay? I'm taking note that maybe GJ or maybe the yen pairs that I like to look at, I may have to use a 15-minute chart on them to give me, look for entry. All righty. But let me hide the indicators, and I'm just going to show you guys just more confirmation. And again, as Nico kind of the fib has been wonders when it comes to finding confirmation, more specifically that 23%. Okay, let me hit play right quick on this. And then look at that, guys. Pretty, 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 pretty. Look at that trade. But look how it moves. Look how it moves with the fib. Okay. Just look how price moves the fib. And don't worry about time frames. Just worry about how we measured the fib low to high and just how nice it moved with it. Okay. It touched 78%, give or take. Made a nice push up. What gave it problems before it actually pumped up? What gave what gave it problems? The 23%. So a lot of times, if I'm entering a trade, let's just say below 50%, I'm taking profit very near the 23%. If my bias is still bearish, I may sell from 23%. Look at that nice push up, 23% buyers, kind of brought it back down a little bit. And then we had this price action to this, and boom, we broke it. We broke the 23%. We came back and retested, pushed price back up, made a new high, and then came back and touched the 23%, and then finally flowed up. And then we finally hit our higher high. Very nice, huh? Check this out. Let's say I measure this high to this low. Like this. What prevented price to really come down? We had the impulse, we had the correction, 61.8%, give or take. It came all the way down to 23. And then it went back up. So regardless of whatever direction you use the fib, if you got into a nice swing low, swing high, you can always, right, always try to find that 23% to come in clutch one way or another. Okay. And that's why it's to me, like, the fib there is important. Now, let me try on the boxes here. Let me rewind back to there, and then we'll go back to gold here in a second. Because this works for everything, right? The only thing that I changed here, guys, was just the time frames. All right, that's the only thing I changed. Another thing that I'm noticing, right? If the 52 is still above the 204 midpoint, this is still just only a pullback. Okay. Let's see how we can find some confirmation. First confirmation is at least let the candlestick get back above the small midpoint. That's kind of one. Two, I would say, let price rebalance the big box. Okay. Okay, we kind of got below of it. That's the reason why I say let it rebalance. All right, there it goes. It balanced it out. Good. Buyers are strong enough to be in that bullish territory. All right, nice. Okay, perfect. We haven't missed anything. Okay. We haven't missed anything yet. Now, I don't trade GBP, JPY consistently like I do gold, right? So I missed this entry, but I was not monitoring this. Okay. Gold is the one that I trade intraday both ways. Other pairs, I just try to find one good move and go with it, right? But look, guys, things are starting to flow, right? Things are starting to flow in our favor. And price that comes back, touches the midpoint of the 17. There you go, Maya. And little by little, we're pumping up. And check this out, guys. Impulse came back, rebalanced the midpoint here. What's the future of the 52? Well, it's all a little bullish from there. Every candlestick, the midpoint goes up, goes up, goes up, goes up, goes up. And then the moment that happens, everything goes back above. And there it goes. Even here, guys, look at this. Midpoints are bullish. The structure is bullish. 15-minute BEC, which we can also apply the 1, 2, 3 strategy, right? That we just learned. Well, that we have to our arsenal. Entry at the 50%. Stop loss at the low. And our take profit is not based on this. Our take profit is based on us measuring the entire big box. So our take profit could be there. But again, 1, 2, 3 strategy. Extra confirmation. We got an ETM candle there. And it took a while. Right before we hit our take profit, it took a while. But even so, right? We then created another impulse. You measure that impulse, low to high, and you apply the same things again. Maybe entry at the 50%, stop loss at the low, and we can just take it to that same take profit. Came back to our entry, unfortunately, but there it is, guys. And yeah, who's ready to see gold? Let's see what this week has for us. See, these were high probability setups right here. These were the Thursday setups. Which I actually sold this. That's what all right, let's get back to business. All right, top down analysis for the week. How did the previous weekly candlestick close? Well, it closed a little doji. Kind of gold has been this little range right here for the last few weeks or so. Let me just take a glimpse up to see how we look. Oof. All right, well, If I fib, this is the monthly chart, monthly candlesticks. So this here is a yearly thing. Oh, even check this out, guys. I'm telling you, the 1 to 3 strategy, or just how price moves in general, works in all time frames. This is the box right here, higher time frame box thing. That's a 12-monthers. That's a year box. You measure the entire year, low to high. Now, granted, it takes years, but next year it retraces around 61%. It establishes itself. I thought this will move faster, but it won't. And it just kind of stayed in this range, but ultimately it bought off around 61%, and then it takes off. Okay. I would have known this back then. No, but we won't hold that long. But look where we're at here, guys. So we fibbed the entire 2024. Let me add the last extension. Okay. We're struggling to really break out of the 618 extension. So I think price really wants to balance out a bit before it ultimately does go back up. So long story short, we are at an area of resistance. Okay, we are. That's all I wanted to show you guys there. We are in an area of resistance. Last candlestick closed bullish. I don't like measuring dojis. Okay, so the only candle. So this candlestick, I don't like it. I'm just looking for the most. I am looking for the closest candle to the current week that shows some control, and it's this one right here. Okay, this one has some control. Okay, meaning that it engulfs something, right? This one was an inside bar and didn't do much. So to me, as of right now, I do like this candle. About from 2 weeks ago, right there. So same back to the basics. Find the high. Previous weekly high. Find the low. Previous weekly low. Okay. Oh, I see it. It is. Dr. Tree's gonna catch there. All right, so let's measure what happened. What's happened so far? You can always do it there with the fib. Okay. Low, high. This week pulled back to about in between the percentages. And then the last week went up. It crashed the negative 18%. We literally kind of marked up the 1, 2, 3 strategy as well, or the 1, 2, 3 markup. If I say I am looking for sales this week, why can you guys give me some reasons why I'm looking for sales this week? I'll give you guys here about 30 seconds.
The wick rejection and the weekly.
One more time.
The wick rejection and the weekly.
Okay, wick rejection, perfect. This is one for sure. Dr. Idris is saying the same thing. Long wick. Even though this candlestick is bullish, where was the bigger movement? The buyers or the sellers? Sellers, right? The sellers ended up winning the week. But my first clue is that we are below that 23%. Nico had mentioned that. That's one of my first clues right there. Okay. So let's go down now to the 12-hour. Daily's fine. I just, for whatever reason, I just started favoring the 12-hour chart when it comes to structure. Like the actual structure in the higher time frame. But daily's fine. Okay. I don't want to confuse anybody. And I don't even look at candlesticks yet. Okay. I'm not looking at ETM candlesticks or anything like that. Impulse, correction, impulse. Okay. Does this impulse, correction, impulse qualify for that? Let's see. Low to high. Impulse corrected beyond 23%, check. When beyond 272, perfect. That one worked. Let's see, from the higher low to the higher high. Actually, technically, we haven't made the higher high, but look at this, guys. This is just so pretty. This is just so. What is this? Previous. This is an extra step that you technically don't have to do, but it's important just to kind of have an idea. Swing low, swing high. Boom. Okay, I'll fib that entire swing. Look at that, y'all. What's preventing it from really pumping up? At 23% from the entire swing. Hey, I seen that movie from Jim Carrey. I think it's called Number 23. Probably one of his worst movies ever. Number 23. I think he made that movie after he made the movie Liar, Liar, I think. Thanks. Let me see, Dr. the Trees. At the 618. Okay, perfect. That would have been the signal to buy, Dr. Trees, right here. So, like, to me right now, like this right here, that was our clue to buy at the first touch. Morningstar, boom. Today, maybe it's something we trade towards. Okay, we trade towards. But you guys see how we're mapping up the chart, guys? How we're mapping it out? Nice and good, nice and easy. If we sell, I think we go there first. Without using the word liquidity, why do you think I want to sell there first? Anybody can tell me? I haven't marked that part yet. I haven't marked it up.
What, there's a low?
That's a low. Okay, perfect. No problem. And Nico, you probably didn't hear. I said without using the word liquidity.
There's also a demand zone there.
Okay. So check this out, guys. Here's a high. Here's a low. What do we do? See, you guys are using terminology. I've been teaching for about an hour, and you guys are using terminology that I have not used at all.
Sorry.
No, you guys are fine.
Not even the drop-based drop right after.
I haven't even used ETM candles. I mean, nothing like that. We talked about low and high, fib it.
You teach us too much. We know so much.
No, you're right. I'm just teasing you. So check this out.
I'll start with the simple moves, though. That's interesting. You know, all the advanced stuff came after the simple moves.
Correct.
Yeah.
So again, though, right? I didn't mark this up, so I did leave it up for grabs. So no problemo. I see that as a high and a low. What do we do when we do a high and low? Fib it.
Fib
Okay. And actually, it was a little too high. Eyeballing it, I thought that would be the 23%. But yes, I would like to trade towards there because, the 23% is down there. You see, guys? So that's the reason I was looking for. But again, everything else that we said, that you guys said, was perfectly fine. So see, I'm just looking for, okay, where's the high probability movement going? And then from there, we worry about those. All right, how can we get in? How can we get executed? And actually, look at this, guys. What are we forming right here? Nice
Drop-based drop.
Very nice. Now we go. Now we can flow with those answers, right? Alrighty. Now we can flow with those answers. Some of you guys may be seeing this right here. Correct? Tell me if I'm wrong. Are you seeing that fair value gap getting filled? So, Nanny?
Oh, yeah.
Check this out, guys. Check this out. Check this out. Check this out. I want to sell from there. Okay. Okay. Not bad, right? But let's say you are bullish on this because you have every right to. You see this as your low, and you see this as your high, right? What do you do when you find your low and your high? You fib it. No way, y'all. Look at that. What is right there in my area to enter?
50 was right there.
No, I'm talking about on the, right here.
236.
Right.
236.
Yeah.
To the sell, excuse me.
To the sell.
To the sell. Sorry, Dan. Now Daniela's asking the questions I like to ask myself. How many pips is it between 50% to 23%? $35 increase, 350 pips. That's a lot of pips.
Nice little chunk of change.
So, okay, I'll wait for the sell, but I may take the buy because we've seen how price moves to this fib over and over and over again, correct? All right, let's find confirmation. Well, looky what we have here. I'm not a big fair value gap person, which is fine. But if I go down the rabbit hole, we have a 4-hour ETM candle. There it is.
Yeah, I think I saw some on a 3-hour as well.
All right, let's check it out. Oh,
Yep.
there it is. Look at this.
Yeah. The rally base rally right there. Right at the 50.
Is this making sense to you guys? This is how the chart is all connected. And is ideally is just mapping out where price could go first. What else would I do? Just for this example, I'll probably stay on this one. So I'm not actively trading it, but like we do normally. There you go, guys. Two-hour. Oh yeah, this is looking good. This zone is looking good to turn around. Very, very good. Yes, I am liking this zone a lot. And now we gotta wait for is, in my opinion, the momentum to shift a little bit in our favor, and then we can execute. We got our zones all marked up. Nice and good. We want to let this green line get above the midpoint, and at least we have the momentum to the top side. And we have a cloud twist bullish. And I would like for us to trade, maybe to that 23% line. But even so, guys, on this chart alone, on the 5-minute, right? On the 5-minute chart alone, what could prevent price from this top area is the 12-hour, right? The 12-hour drop base drop. What could prevent price from really hitting the 23%? You see, guys, there? These candlesticks will be shifting as time goes. Excuse me, this high above. Let me do this so we won't get too much in the way. There it is. Okay. So yeah, this high up here is due to expire. So then when these candlesticks drop, perfect. Yes. So let me mention that first. When we get more candlesticks, the box shifts to the right. Okay. So this higher, so these highs have an expiration date or expiration time, right? This one is first. Once this one expires, the box will start shifting down little by little until it finds the next high. Okay. And then the midpoint will also drop, and then so forth. So again, they'll see we may not be able to trade all the way to 23% because this midpoint is going to be pushing it down like a ceiling. So regardless, though, from now or a little lower to 38%, it's a $20 move. Or even so, actually, no, hold on. You can actually even tell the future of this if we really wanted to. And we'll close it out with this, guys. All right. So we'll close it out with this example, and then I'll show you guys I'll share with you guys the chart. I want the high to be this candlestick right here. Okay. So I want that much time to pass. Right there. Okay, how much time is that? That is approximately from that high to there. That is 60 bars, right? So that's 5 hours from now. So when the market opens at my 5, that'll be 10 p.m. Okay? That'll be 10 p.m. What time is 10 p.m. in military time? 22? No. Is it 22? Thank you, guys. Right there. That is 10 p.m. At this time, all of these candlesticks will leave, and then that will be that high. That'll be the box at that time. So we can tell the future by locating that high. As long as price doesn't go lower, right? There's a future midpoint. And there it is. So as long as it doesn't go lower, this lower remains intact. If it goes lower, it goes lower. But regardless, this high is about to expire, and then this one will hold the fort for just a little while longer. And that would happen right at 10 o'clock. And then it just dropped a few pips. About 40 pips. But again, though, right, it's 40 pips away from the 23%, which that makes a difference. Okay. But all right, those were just the fine details that that just kind of show you guys how that works, just for the recording purposes of it. Let me just go back to the 1 hour time frame. 2 hour. I really do like this area here, guys. I am in favor of looking for sales at this 12-hour base drop for the move of the week. We won't shy away from buying. Okay, we won't shy away from buying when price goes a little bit lower. But in this way of looking at things, you know, in my opinion, is just we just can't get lost. You know, we can't get lost too much. And then we look for the sell. 61% one, Andy. If you're talking about, yeah, this fib, low to high. I'm sorry, from high to low, excuse me. Sorry.
All right, so you see where the first ETM is, G?
Okay.
I realize where the 4 is golds have a tendency when you're like doing it from like eye perspective, like on the major time frames, it likes to play between the 61.8 and the 78%. So like the banks, they tend to step inside there. So
Okay.
the one that you have marked up, the lower one, would probably be a good trade to take it back to the
So somewhere around here.
right there at the 4 So right in the middle, it normally likes to hit this side there, like it do a little liquidity sweep or something, and then it goes all the way up. Because if
And
you
then-
even realize on the 4 there's like that small Fair Valley gap right there, and the wick on the this is what the 3 right in between there, in between your little white line. Yeah. So Mike can just wick there and then shoot all the way up to the 23%.
Yeah, and then again, when however low this goes, right? However low that goes, at some point we'll be able to fib that, and then get a better entry for us to take. But yeah, ultimately, guys, this is kind of what I'm looking for. Anywhere in this area, it's to me the no trade area for sales. Kind of wait for the buys to show themselves, and I don't mind taking it back up to maybe 38%, and then we potentially look for down. I'm trying to get this big move for the week, big move for the week, and that'd be good for me. I mean, we can probably even take it all the way down to the previous weekly low. Nice. There you go. Yep, you're right. Here it is. All right, well, that will conclude our today's session. Hopefully, you guys got a lot of value from it. The moment the recording is ready, I'll share with the chat, and it'll be also in the YouTube channel on it. Any questions? Feel free to let me know. We'll make sure we have everybody uploaded in their SRS system. Make sure that you're registered and also put in your TradingView username. We'll try to knock that down all in one shot. If you need help with that, you can always message myself or somebody else kind of referred you to us. I asked them for guidance because I would need, like for example, like Letitia, she had sent me a screenshot of somebody that she referred because I need their email and the TradingView user so I can put that on my spreadsheet to submit for an expedition. But yeah, thank you guys for being here, guys. Great session, great morning. Everybody have a great Sunday morning, and we'll see you guys. Oh yeah, so Monday I do live trading in Spanish. You guys have access to it. Feel free to join. But we'll officially go back our live sessions in English starting Tuesday. Have a great morning. We'll see you guys in the next one. Bye-bye.
Thank you, G Money.
Pleasure.
Thank you. So much appreciation, sir.
My pleasure, Dr. Latrice. My pleasure, guys.
Thank you.
Thanks, G. Catch you later.